Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. What is up, everybody? Happy Thursday. Welcome back to another episode of Benzinga Live. And we've got a packed show today. A lot to talk about. Of course, the US GDP numbers come out this morning a little bit higher than expected. Some good news for the economy, but we'll see how the market's taking it. And then, of course, yesterday after the close, we had Tesla reporting earnings. Tesla beat on both revenue, sales numbers, and EPS. Stock is trading up. Let's go ahead and pull up our Benzinga Pro, see exactly how much Tesla is still up today. Up about 9%, was up as much as 10% earlier in the day, so coming off the highs a little bit. Let's take a look at the 5-minute chart. You can see here on Tesla, got up to about more than $161, now down to $156, but still great day for Tesla, great day for long, EV investors. You can look at how some of the other EV stocks are doing. BYDDF, the Chinese EV maker, that's of course backed by Elon Musk, is up about 4.5%. Elon Musk, backed by Warren Buffett. Elon Musk actually said yesterday in the call that he expects essentially Boyd to be number 2 in the world behind Tesla as far as EV makers go. Boyd actually delivered more vehicles last year than Tesla. The caveat here is that some of Boyd's vehicles are technically hybrids, not fully electric. They're plug-in hybrids though, so they can basically operate as fully electric cars unless you need the gas. So I don't know. If I was counting I would just want to see who's delivering more vehicles. And so far right now, that's Boyd. But Elon, like he said, expects Tesla to be number 1, Boyd to be number 2. You can look at other EV stocks. XPeng up today. NIO up about 3% today. So all EVs trading higher with Tesla today. We can go more into Tesla earnings. So the one thing, smash the like. Yeah, smash it. Don't just like it. Don't just touch it. Don't just click it. I want you to smash it. Smack that like button in the face. And sometimes, by the way, it doesn't happen often, but sometimes we are right. And when I say we, me, my guests, whatever, on this show, we are sometimes right. It doesn't happen, whatever. But just a couple days ago, I was talking about how the short interest for Tesla has been creeping back up. So if you guys remember, for a while, let's pull Tesla's chart back up. For a while, and I'm talking about for years, Tesla was one of, if not the most shorted stock out there. And there are different ways to measure that, right? You could look at the short interest percentage of stocks. You could look at the total money being, sold short, whatever. But however you want to put it, Tesla was one of the most shorted stocks on the market. And after essentially years and years and years of getting crushed, some of these bears started to get wiped out and started to cover their shorts. And Tesla really kind of started falling out of, say, the top 10 of most shorted stocks. It was still always heavily shorted and probably still always will be because Tesla's very polarizing, attracts a lot of haters. But okay. Around here at the top, let's say the short interest has diminished in Tesla at least somewhat. It's now not one of the top short stocks. Then the stock starts sliding. Then short interest, people get more bearish as the stock starts sliding. People start buying puts, whatever. And then, of course, even here in the past month or so, as Tesla started to come back, you can see here the bottom, late December, we were at about 110 up to about 155 now. As the stock started coming back up, people were looking at this saying, okay, Tesla's cutting prices, Tesla sales are slowing, there's a recession coming, and the stock's up the past 2 weeks. I'm going to get in and short it. So again, now over the past month or so, the short interest in Tesla has started to increase. And I said, just 2 days on the go on the show, even if I don't like the outlook of Tesla right now, even if I'm worried about the economy, even if I'm worried about EV sales or whatever it is, I wouldn't want to be short this stock while the short interest is increasing. Especially, when you look at the overall market, and there are signs now that we're seeing where companies are giving bad news or bad guidance and the stocks aren't sliding that much. There there are signs out there that maybe, you know, bears, shorts in general are starting to get exhausted and that people are starting to, you know, feel a little bit more comfortable investing here. So with Tesla being a big weighting in the S&P 500 and everything, I think, you know, all the problems currently with Tesla aside, right? The company cutting prices, sales declining, all these things. All those problems aside, if the overall market continues on this more bullish trend, Tesla's going to benefit from that. And all these people that have now increased their short positions or started new short positions on Tesla throughout the past couple months are going to be forced to cover, just like what happened with people who were short in Tesla, you know, years ago. And all this to say, that does not mean I love the stock or am buying the stock here. In fact, I'm not. I sold basically all my Tesla shares, and I have not bought back any, and I won't be buying back any, even if we see, you know, a big type of short squeeze. I was just saying, if you told me that I had to either buy the stock right now or sell the stock outright, I would rather buy it, because I wouldn't want to be selling the stock, Tesla, right now when people are still bearish out there, not just the stock, but you know, SPY in general and the market in general. And the old saying goes, right? You don't want to short a dull market. I think there's more outside return playing on the long side here than the short side. Let's see. Catching up on the chat. GOVX. AB in the studio always. We're always in the studio. We live in the studio. GOVX pushing green. What are you talking about? It's down 15% today. Let's go to the 5-minute candles here. Maybe see what you're talking about. I don't even know what this stock is or why it's moving so much. GOVX is a U.S.-based clinical stage biotech company. It is engaged in developing immunotherapies and vaccines against cancers. Okay, actually, I do remember GOVX because this ran a couple times back in the past. Let's go to the daily chart here. Yeah, I remember this running back in August, got up to $4. You had a couple times it spiked back. Yeah, I was going to say back in the day, too. I don't know, LaCroix. I mean, these aren't typically the stocks that I'm looking at, that I'm trading. IBM also reported yesterday. Let's go into... So IBM sales actually beat by a little bit. The EPS in line, stock trading down though. So that kind of goes against what I've been talking about, where, you know, look for companies that when they give bad news and the stock still doesn't really go down a lot, that could be a sign of the overall market turning around. That could be a sign that, you know, sentiment is starting to shift. But this IBM kind of going away from that because it sounds like the quarter wasn't terrible. Maybe the guidance was really bad. I'm not really sure. It's a penny, AB, don't worry. Monkey, that's what it was. When monkeypox started going crazy, GOVX was popping. Speaking of, I mean, I haven't really checked in on like how Moderna, how Pfizer, how these kind of crazy COVID stocks went out. Moderna, I do think is interesting because, like, from a valuation number standpoint, I think it's very hard to get a gauge on this stock because you have to realize how, you know, what type of numbers the company put up in previous quarters and know that, like, okay, those numbers are probably not, you know, going to, you know, like, think about it. From a COVID vaccine, how many vaccines were administered from Moderna in 1 year? And they're not going to hit those numbers again. Those numbers aren't going to be back where they were. So if you look at the PE or you look at whatever, but from a growth perspective, mRNA, I mean, Moderna has this mRNA, you know, type vaccine that they're now going to start using for a bunch of other stuff outside of COVID, right? Whether it's AIDS or even like cancer stuff. So I don't know, like, long term, I'm not, you know, following the biotech or medical stocks that much. But I think that's, you know, you have your explanation of why the stock went crazy, right? I mean, I think in hindsight, we can all say it was silly. The stock got up to $500, but either way, we're now back down to below 200. And if you wanted to give me all the bearish news or all the bearish numbers based on how Moderna is not going to make as much the next couple quarters as they did the previous quarters this time last year or even the year before, all these things, I understand. But I think there are people out here buying it. I think the reason why it hasn't slipped more, I think the reason why it's kind of found this floor at around like 113 and then started to come higher is because you had a lot of long-term investors that were really looking at Moderna's potential down the road and not necessarily just Google, Pfizer. Are they? I don't know. I saw. See if we have anything in the news feed about it. I'll be honest, Jay, and I don't want to get like political. I've followed that or I've followed that like Project Veritas and James O'Keefe guy on Twitter for like a very, very long time. And my only real criticism of him or of it is I think they just like overhype their like findings or whatever it is. Like every single time I feel like that guy is like, I have this new like bombshell thing that's gonna, like change the world or whatever. And then they come out and it's just some some like guy from Google talking about something off the cuff, Let's see. I mean, sorry, I'm trying to look at what there's. I don't know. Looking at the Pfizer. Oh, I thought you were saying Google was also brought up in it. I mean, yeah, I think there's a lot of like, again, like if the whole thing here is, and I'll have to watch these videos and stuff from Project Veritas when I'm not on the air, but that's literally what like the people that are like studying these drugs and stuff that do. They like mutate the drugs in the labs and stuff. And I think a lot of people like either know or they think that's how COVID really started. And I think that's a viable theory, right? That these like scientists that studied the thing in the lab. I don't think Pfizer themselves as a company is creating new diseases, if that's what this video is alleging. It says, from what I heard, they Pfizer are optimizing the COVID mutation process, but they're going slow because everyone is very cautious. Obviously, you don't want to figure out like why would you not want the company that's developing vaccines for a disease to study the disease and try to figure out what the next, right? Like we know historically, you look at history, we do go, or at least like I heard from doctors and stuff before COVID even started were saying that in the past, diseases like this were kind of, we got over them when there was a more mild version of it being spread out, which is kind of like what we got with Omicron, a more mild version of COVID, but it's more contagious, saying that that's going to happen. So if you're like Pfizer and okay, like historically these diseases mutate and whatnot, there's going to be a new version of it. Like I would want the companies that are developing the vaccines to try to have a head start on that. Like we develop probably crazy and new diseases every, like, I don't know. I don't think from, again, and the way my only real criticism of the Project Veritas guy is again, how they promote kind of over promise and under deliver, it seems like most of the time. Alrighty, y'all. But yeah, I mean, I know that's a very controversial, polarizing topic. So I don't know. Again, like exactly like this James O'Keefe guy, I don't know what he said on his tweets, and it was like the biggest story ever. If it was, you'd see Pfizer down more than 2.5% today, right? I don't even know if that's like out of line. Like it seems like a lot of biotech stocks are trading down a little bit today. Moderna's down 1.5% today. So I don't know. I mean, like at the end of the day, the market's going to be the biggest judge of these things, and I don't think, if it came out that it was true that Pfizer was doing all these things with nefarious intentions and trying to start new diseases to make more money, right? Like, and there was evidence of that. I would expect the stock to be down a lot more today. All right. I see my man Steve Kalayjian hanging out backstage. Before we bring him on, let's do just a quick rundown of the overall markets. The Qs up about 0.8%. SPY up about 0.3%. The Dow Industrial Average pretty flat down, up, barely up 9 cents. The Dow Industrial Average ETF is. Bitcoin trading down slightly over the past 24 hours. You can see still hanging out above 23,000, albeit very slightly. We're about $23,010 or $23,010, $20 right now. So if I were long Bitcoin, I'd be trying to make sure we hold above that 23,000 level, but we shall see. ETH, of course, been trading higher as well the past couple weeks. So hey, if you're into crypto, you're loving this price action the past couple weeks. But without further ado, let's go ahead and give Mr. Steve Kalayjian our very special Zinger Nation welcome. And when we come back, we'll be talking to Steve K about what stocks he's been trading, what he's seeing in the market. What is up, Mr. Steve Kalayjian? How you doing?
Hey, Aaron. Hey, everybody. How you doing?
Good. How are you?
Oh, a little under the weather.
Under the weather?
Yeah, I got a little cold here. A little head cold. Just knocking me out here.
There's been a lot of that going around recently, I think.
Yeah, I'll shake it through. How you doing?
I'm good. Market pretty. I mean, we had a pretty big news day today between the GDP and Tesla earnings, of course, yesterday. So good to see some volatility. Good to see some, some good catalysts for the market.
Well, yeah, yesterday after you saw the Microsoft earnings disappoint, right? I mean, the CEO guided a lot lower and pretty much a horrific view for the next quarter or two. And then you saw, the market down, and next thing you know, around 11:30, the Bank of Canada decides to raise rates by only 0.25%. The market gets all euphoric, and what do? They feel that the Federal Reserve is going to start to, dwindling down in their rate hikes going forward. But I got to tell you something, and that started a monster bear market rally. And I told people, bear market rallies are more vicious than bull market rallies. And when you see them, take, I got the big buy reversal yesterday, and then we on everything, people just were buying everything when they got those big buy reversals. And then next thing you know, they're unchanged on the day, and then they sold off near the end of the day. They unchanged and went positive, and then they sold off towards the end of the day. And then, you're seeing volatility here. And more importantly, just on yesterday's note, on the quarter point rise by Canada, our inflation right now is still on the CPI at 6.5%, and 2% is the guideline by the Fed. Now, unless they do some crazy math and rework the CPI all over again, right, you're still 4.5 points above their target rate. So I don't know where they're going to, Kashari's still very bearish. He's hawkish on rates. He's talking 5.5%. Bullard 5.5%, maybe 6%. I don't know how they're going to get out of this. Now today you come in and you have a strong durable goods order. You have a strong GDP. Better, right? You're not going into a recession, right? Yet, and they gap up, and there's nothing but monster sell divergences. S&Ps trade 40.67, and they drop 35 handles off the high. This is a bear market, and people who are going to get jumping up and down thinking that they're going to establish new positions on my book, remember I said about a couple of weeks ago, I thought Tesla would short-term bottom between 100 and 106, 108. Got down to that below 102 for a blip. And then I thought my short-term target was like 117 to 124. So I blew that out up to the 156, up to 144 before the earnings. But, I think right now, potentially, Tesla, next pullback It should happen the next 6 to 7 days, except for another long off the daily charts. But a lot of volatility here, a lot of good plays in the market. But this is not, in my opinion, the time to start taking positions for the long term.
Yeah, I mean, I think a lot of people right now, Steve, like you mentioned, are still, they still, are feeling like this is a bearish market, and that they're not ready to go long yet. We've talked in the past about what the Fed's doing and stuff. Right now, outside of the Fed, is there anything you could see that would get you more bullish, or are you looking for like a capitulation point? Like where
Yeah,
do you
I
see
like to
where?
see it. I like to see a capitulation point. I've seen it so many times in my 40-year career. So, and those are the times I know it's tough. You jump in and buy. Your stomach's ripping at the seams sometimes. I did it in '08. I did it many times in my career. I did it during COVID, when people were dying, and I said, you got to just make a stand and think that they can do everything they can to fix and find a solution. In the '08, if those can remember, was a subprime market, and all the rating agencies were fugazi, and the Dow got down, to the below 6,700. So I mean, I've seen it all, and there's no capitulation here. Even if the print low back in October of last year to the 3502 on the S&Ps, that didn't feel like a capitulation, and I think we're far away from that.
Yeah, I mean, what like how low do you think, like, let's take like Apple for example. We're at like 142 right now. I mean, like, how low do you think we'd have to go on Apple to hit that capitulation? Like, how deep do you think this? You're still pretty bearish.
I think it could fill that gap right there.
Which gap? Down to We're down to here.
Yeah.
Okay, so Apple down to about 100 would be down, about another 30% from
Yeah.
here.
I think the market's got, if my math is right, I'm looking at the S&P sometime this year, 3,000 or below, and I think it'd be the buying opportunity of a lifetime, because at that point, I think the first rate cut is going to project a significant bull market. And I know that there's other factors to take into that. Don't get me wrong, but I think they're going to be aggressive on it, and I think the S&Ps in the next year and a half will be above 5,000.
Wow. Yeah. I mean, that'd be a huge swing because we're at about 4,000 right now. So we'd have to drop 1,000 points and then go up 2,000 points from there.
Yeah. I mean, did you ever think that you would see negative oil in your lifetime?
No, I did not. No, I did not.
Right. So did you ever see a Dow 3,000 down? We all did, right? Never. So, and that was, crazy. Negative 3,000. Back in those days, they were moving 2,000, 1,000 points a day. So I think that right now there's a lot of complacency still. I think that people are, with today's GDP number, are going to say that the recession is probably going to be a mild recession. If that, you saw LRCX, Lam Research, lay off 7%. Another company laid off 3,900 people today. Oh, IBM, 3,900. Corporate America is starting to feel it. And I think, people are going to start losing their jobs here. And that's not a fun thing for any American here. It's terrible. It's horrific. And again, I blame the Federal Reserve on this because they just let it go. They let it go. They let it go. They didn't care. I think the thinking to them was higher asset prices will offset the rise of inflation, but they don't get it, that the fact that not every American is in the stock market. A lot of people in middle class America are not in the stock market, and if they have to go pay, okay, forget eggs because of the birds and all that. They have to 59,000 birds they had to kill from the virus, but just say like lettuce. Average person can't even afford a head of lettuce. It's $8 a head of lettuce now. It's be $1.99. So I think a lot of people are really feeling the pain from the rise of inflation here.
Yeah, I agree with that. I mean, I think, the inflation issue is one that I think will be the biggest, factor here in terms of if it picks back up, if inflation, starts going back higher, then the Fed's gonna have to keep rates higher for longer and keep raising. But if inflation continues to fall or show signs of falling, then it might get the Fed a little bit more leeway in terms of where it can be. And I mean, I understand that there's only a certain amount of Americans that are in the stock market, but at the end of the day, if the market fully crashes, I mean that's basically only coincided with like big also increases in unemployment and layoffs and whatnot. And then you also have, at the end of the day, even like teachers and police officers and whatnot whose pension funds are baked into the equity prices in a lot of cases. So I don't know if I really buy the fact that the Fed would essentially let everything just slip and fall down below 3,000 just to try to get inflation from, say 6% year over year to 4%, whatever it is. I just don't know which one would be more painful.
I think today's numbers really put them in a hemlock. I think, the durable goods orders was much stronger than expected. The GDP is 2.9 versus 2.8. If the numbers had come in weaker than expected, I think they would have been in a better position that they could have said maybe a quarter point is justified. We want to see how the economy reacts with this. We want to give it a little bit more time. Now you have two very strong numbers here. So the economy is not really faltering yet. So I think today's number puts them in that type of a headlock per se.
Got it. Yeah, I mean, it definitely will be, interesting to see how, the Fed kind of responds here and going forward, because at the end of the day, from an economic standpoint, we keep getting pretty good data, whether it's unemployment, whether it's GDP coming in higher than expected. So I do think the Fed now is in a position to where it says, hey, we can keep kind of raising rates for longer than we initially thought.
I think that I do think that they're going to. I really do believe that they're going to blow past the numbers that people. I think that's what's going to spook the market.
Got it.
That's my personal opinion. I just think that, again, you just see the markets are like, you had the excitement on the opening here, right? And now it's just like flatlined. It's just like very dead, very quiet. I just think that people are waiting for some catalyst here.
Yeah, we'll see. I mean, I think a lot of people anticipated this earnings season being a big catalyst to either move us to the downside or to the upside. But yeah, Steve, I mean, I think this is like I said. I mean, it's going to be kind of we're going to stay in these volatile times. It seems like for the next few months. I think a lot of people. I mean, at the end of the day, the Fed stayed course, right? The Fed stay hawkish. I don't think we should think the Fed is gonna pivot until they do, until the Fed shows us real signs, until Jerome Powell shows us real signs of saying, okay, inflation's well under control. We've tackled that problem. Which, if anything, he said the opposite so far. He said we still need more evidence. We still have a ways to go. So, we'll keep watching this, Steve. But we are running up against the clock here, so I'm gonna go ahead and share TradeEasy.com. Anything else you'd like to get to today that we haven't touched on?
No, I just like I said, it's earnings season. Be careful with the stocks that you're in, or, I teach all my people in my community, it's not worth getting in front of an earnings report. You can always trade them afterwards. So I think that's a wise piece of advice to give people. To me, that's gambling. Don't jump in front of an earnings report.
There you go. All right. Well, Steve Kalayjian, if you want more from him, go to TradeEasy.com. Steve, as always, thanks for hopping on Benzinga Live with us today.
Thanks, Aaron. Have a great day, everybody. Thank you. Bye-bye.
You do the same. Alrighty, y'all. That was Mr. Steve Kalayjian from TradeEasy.com. We're going to keep the show ticking and rolling today. I see our next guest hanging out backstage. We've got Julia Cordova from Cordova Trades. So without further ado, let's give Julia our very special Zinger Nation welcome and see what Julia's been trading when we come back. Hey, Julia, how's it going?
Hello, it's going good, thanks. How's it going for you?
Good. We're here in Detroit. We've got a nice little snowstorm behind me, which is it's pretty to look at, but it makes driving less fun.
Yeah, I remember that. I used to live in Boston. It was cold there. It's, you know, even for Florida, it's been pretty cold here, but it's still good to drive. So
Yeah, there you go. Well, Julia, so I know you, we were talking off air the other day. You mentioned you had kind of an interesting trade that was setting up. I wanted to know if you wanted to talk about that today or just anything else you've been looking at.
yeah, I'll talk about it. So
Okay.
Okay. So the market is on a verge of a breakout, right? Like, you know, everybody's got a different slanted line going on. It's about to break out a long-term downtrend. Is it or isn't it? And we're just right on that edge of that right now. And I will say that if you noticed last week, NASDAQ actually started sort of peaking it above ES in terms of its forward moving progress above that goal. So one could make the argument that if we break out, NASDAQ would start leading that breakout, having been the weakest for a long time. If we don't break out, however, and then everything comes back down, I think that oil, which is also, by the way, close to a breakout, needs to go down either way. Because if we go up and the NASDAQ leads that, lower oil prices is better for that. If we go down, and the argument is that there is a recession coming, then oil prices need to go down for that. I am a longer term oil bull, but I first think that oil prices need to come down from here. However, I'm not married to that. I am looking in particular at 82.39 on a weekly basis. That's for me the big key. And as long as we're below that, I am keeping my confidence going that we'll be going lower.
Hey, sorry, when you say 82, are you talking about the price of crude?
Yes, 82.39 for CL.
Okay.
Yeah.
Got it. Sorry, we don't have the commodity prices on here, so I'm just looking at the USO right now. But yeah, so I think that makes sense, Julian, and that's been something that I've kind of pointed out and talked a lot about on the show here, is that if you look at XLE, right, or you look at USO, or you look at some of these different oil or energy ETFs, I mean, this is XLE's chart, which, you know, of course, has Chevron, Exxon, all the big energy names.
Mm-hmm.
It's at like all-time highs right now. It has not priced in, well, not, I shouldn't say all time, but it's at, you know, whatever.
Yeah.
Basically at like 5-year high, going back to since June 2014. Basically at like 10-year highs. Higher than we were, you know, everything else has been down a lot. You look at SPY. Something doesn't match up right there. So it's either like the equity, like the overall stock market's pricing in a mild recession, but the energy market isn't. And that means that then XLE and oil will have to come down, like you said, to match those, you know, recession fears.
Right.
Or I think the flip side to that is that stocks like SPY and stuff has to come or could come back higher, basically saying like, yeah, energy demand's still high because there's no recession. Like people are still out there spending money. I don't know why, you know, you guys are trading down so much because everything out there is doing okay. I think like there is a mismatch there. So there's a trade to be had for sure.
Yeah, I think that if SPY does break out, it will potentially require oil to be a little bit lower initially, but that's just my opinion, and I could be wrong.
Yeah, no, I mean, I think the only, I guess, like, way I could see something else different like happening would be, I guess, if you looked at just the price of oil and you said that, okay, the dip in the last, the past 6 months or so, part of that, the price in the actual oil dipping is because of recession fears. So then if those subside, could actually be a bullish catalyst for oil too. But then, like you said, that maybe that wouldn't then be good for SPY or other stocks. But
Right.
I don't know. There have been periods of time in the past where
Yeah.
oil's gone higher and SPY's gone higher.
That would mean that we would have faith in the economy, right?
Yeah, and that's
I
and
mean,
that's
do
kind of
we?
where to me, like the XLE does, for whatever reason, the market is
Yeah.
saying like in energy, like I guess you could argue that demand could go down because supply is staying higher, that prices are just going to remain elevated. So it's not as simple as saying just because the XLE is high, that means the market likes the economy. I know that's not true, but the like longer we go without any like dip in here, the more I think like maybe people are starting to feel a little okay about the economy.
Yeah, and maybe and you know what, you're not wrong. And I mean, technically speaking, the oil chart does not look bearish to me right now. It didn't look bearish to me before. It's potentially forming an inverse head and shoulders on the weekly time frame. I don't know if you can look at it or not, but
wait, sorry, on what, the USO?
On CL.
Oh, on the what time frame?
On the weekly.
Okay, let's see if the USO looks similar.
Because there was a giant failed head and shoulders before with the neckline right at 93.70. That was a giant failed head and shoulders, and now there's a smaller inverse head and shoulders with a neckline right at 82.39.
Okay,
so
and if you want
it would be the same.
You are able to share screens on your side. Sorry, go ahead.
I can do that? Okay.
Yeah.
Let me just.
It's typically easier. You should be able to click that present button on the bottom, and then you should be able to share it just by like window or tab, which I've found to be easier than sharing the whole screen.
All right, let me get rid of my okay, I'll do that. Let me get rid of my drawings here. It's a lot. It's intense for somebody. Hold on. Okay, I know. I can say what I'm doing. All right. Let me get it going here. And what do I do here? Present and share. All right. I'll do a Chrome tab. Okay, I got it.
Beautiful.
All right, can you see it?
I want to make sure you can. Yep. All right, I'll pop that up instead of mine. There we go. And I'll go full screen for a second just so we can see.
All right, I don't have any shapes on here, whatever. Okay, but try, if I'm moving my mouse here, do you see this line right here that I'm moving my mouse? Okay, so there was a giant inverse head and shoulders here with that as the neckline. Like I said, 93.70. So here, it failed. We never got back above it. Now there's a smaller one that's formed here with that 82.39-ish as the neckline. So it could potentially be repeating the same pattern over again in a smaller way. But we'll see. I mean, it's right. It could break out above. It's right underneath the 20 weekly MA right now. It's a crapshoot. I mean, I think this is a contrarian trade, so I've sized appropriately for that. But I will say that if we do not break out above 82.39, I think potentially the downside move could be swift and fast into the 60s. And if I'm wrong, I will say, and if I'm wrong, potentially we're going to 89. So either way, there's a trade to be had. It's just knowing to watch 82.39 and being flexible.
Yeah, and that's what I love about what you're doing here, Julia, is you're looking at this situation and saying there's a trade to be had either way. And you're weighing, the risks and rewards. You're weighing the macro outlook and saying, I like it this side. I like it to the bear side. Here's why.
Yeah.
So how are you setting up the actual trade? Like, how are you putting the trade on? Are you shorting oil outright? Are you buying puts? Are you, I want to hear about how you're setting up the trade.
Sure. So last week on Friday, I shorted oil. And then when we got to 82.39 early this week, I added to that. Then I took some off just recently. I don't even know. I took some off and then I added back again, actually this morning. So, I'm just sort of juggling contracts until I'm convinced that I'm wrong, which would be above 82.39.
Got it. All right, yeah, I think that makes sense as a trade here. I like, again, the idea of seeing that there's kind of been a discrepancy in the oil markets and then also the stock markets and what's going on with the economy, because that's something that I noticed as well and have been talking about on the show. So, Julia, outside of oil, have you been watching anything else? I mean, have you been following the tech earnings? You've been following, of course, this morning we had the GDP number.
Yeah, I've been watching the metals, silver in particular. I freaking love silver. I don't want it to disappoint me, but it keeps getting to the long-term breakout line. Let's see. I'm going to leave that one shared, but it keeps getting to 24.39 and then turning around again.
On silver?
Yes, but I will say I am optimistic that we will break out soon. But I will say it's against the odds. The odds are for it coming back again, going into the high 21s to low 22s. And then we see, so one option is it goes back there to the high 21s to the low 22s and then goes up, I think. Or if we break out above 24.39, we're going to moon. I'm actually, I don't like to calculate things in advance because I think it's very jinxy and I'm superstitious like a lot of traders are. So, I think though we can definitely get to potentially 25 area at a minimum if we get above 24.39. That's a very minimum.
Got it. Yeah, I mean, I see some people in the chat that are also bullish silver. Joe saying it's a 2-year trade. Also in Michigan, it is cold today up here in Michigan. Joe, hope you're staying warm with the fam. But yeah, I mean, so why essentially is there a particular reason you're bullish silver here? Or do you just like it long term in general?
I'm a little bit of a undercover silver bug, so I like it in general longer term. I think it's underpriced compared to gold. I think it hasn't. Silver is one of those trades too that if the market goes up, it's an industrial metal. It should go up with the market. If the market goes down, as long as it's not crashy, then I think it should go up as a hedge, especially now where we are positioned. So I think either way, longer term, it's going up.
Got it. Yeah, and I mean, I think in general right now, if because I mean, I guess some people like gold as like a counter cyclical asset, right? That if like stocks are going down, they want gold, or if whatever. But I mean, really, we've seen in the past, or at least like since I've been following the markets, I feel like a lot of times where like the stock market's going down and gold's going down as well, or like do you find that they often move like inverse of each other, or that sometimes they're trading together?
So that's why I don't like correlations too much. It really could go either way, and it has gone both ways. I think sometimes people think about gold as a hedge, other times not. It depends on how much confidence people have in the move going upwards or downwards, whether or not they think of it as a hedge. And if the market is crashy, then gold will be crashy too. Like there's no, it's not like gold is not going, if people want to get their money out of the market, they're going to take it out of gold as well. But if people are nervous about the market and not necessarily trying to, exit stage left, then they will sometimes buy gold as a hedge. I mean, our monetary system is so messed up. I do think eventually, potentially, we could go back to a gold standard, but that would be the smart, responsible thing to do, and probably nobody wants to do it because it'd be a lot of short-term pain.
Yeah, I mean the commodities to me right now, gold, silver, metals, like are very interesting because I think you have people who have been kind of like burned by stocks and tech stocks and whatnot the past like couple years, and they're maybe thinking like, I want to invest, but I want to invest in like a real hard asset. I want to like buy gold. I want to buy silver. I don't want to buy, Carvana stock or Roku stock and watch it go down another 80%. And so I get it why like people are maybe more bullish metals commodities this time around than maybe a couple years ago.
And that also didn't, I mean, that commodities being bullish is really the last stage of any bull market, if this is a bull market, right? We haven't really experienced that yet in gold and silver. I mean, there's a lot of resistance to get through, but if it does get through it, holy smokes. I don't think 60 is unrealistic for silver.
Yeah, one thing that people, you like you mentioned, like bullish commodities cycle is often associated with a bull market in general. I mean, it just makes sense. I mean, if you think about all the commodities that are needed and metals that are needed and resources for just everyday consumption and our economy in the world, right? Or like iron and copper and all these things, when the prices are going up, it's because demand is high and demand is rising, and the opposite is true. So a lot of people say like, oh, look at Dr. Copper, or Dr. Copper will tell you how the market's doing, and if copper's doing well, people like to think that the economy is doing well. This is just one copper company, Southern Copper, but it's been trading really well, and I like the way this chart is set up, Julia. What do you see here? This kind of nice, like symmetrical round, you had this kind of consolidation down here, filled this gap to the upside, but now we're right here at this kind of resistance spot.
Yeah, I see the same thing in the commodity copper chart. We're right sort of on the edge. So we're on the edge for oil, we're on the edge for copper, we're on the edge for the market. Everything right now is at an inflection point. So, I mean, I was thinking that this week might be a big move for copper and oil, and I didn't, of course, you don't know which you have a bias, but you don't know which direction. But so far, it hasn't really moved the way I thought it would move. It might be like, oh, we'll wait another. It's always like if you think a week is going to be important, it's like the week after or whatever it is. But yeah, no, I can look at that chart right now. I see it. I see a very lightly sloped trend line that potentially it's already back testing. So
got it.
Yeah, I could see, if it's a fakey breaky, then it'll go down pretty hard. But if it's just back testing right now, and it's got a big breakout to go, right? Because I love the way it looks overall.
Yeah, I mean, if this clears that previous level, I mean, whether you're looking, like you said, at the copper's commodity chart or just a specific name like this Southern Copper, I'm sure there are other copper ETFs or whatnot you can look out there. But if it does clear that, and I mean, like all of a sudden it looks like we're like off to the races, you have not only the fact that, demand for copper just as it's been used could be increasing if the global economy starts looking a little bit better, but then you also have the fact that copper is being used more and more and more now in like electric vehicle batteries and things like that. They actually extract cobalt and whatnot from copper. So there's a lot of, people that are like super bullish the long-term future of copper. And it's like, it's just so funny to me. Like you find these little sects of investors that love a certain thing. And it's like, all right, like people are talking about copper as if it's like the next like Apple or Amazon.
I know. You know what? I know.
Palladium and like other stuff like that too.
Yeah, I know. I noticed some people that follow me now have copper hashtags going on. So, I mean, it could be the most unsexy, unloved metal that will have the most amount to go because it is more of an industrial metal, of course, than something like silver. So, I mean, more power to them. I hope they're successful.
Yeah. All right, Julia. Well, we've got about 5 more minutes. Anything that we, haven't touched on yet today that you want to get to?
Well, now you put me on the spot. What are we going to talk about for 5 minutes if I don't?
No, we don't. I mean, I can let you go. I can let you go early too.
No,
We
no,
can talk
no. Let's see. We could talk
How about
about the market action today.
Yeah, or talk about like Tesla. Like, I mean, a lot. We have a lot to talk about.
Yeah. So this morning, we got to my NQ resistance, and it was right at 12,066, and then we just went down, and then we got to my ES support. I use both simultaneously of 40.28, and that held really well. So I think we're just going to chop a little bit today and then figure something out tomorrow. Tomorrow could be a big day, I think, for the market.
When you say a big day, do you mean a big day to the upside, a big day to the downside, or
yes,
either?
I mean both. I don't know.
Okay.
Yeah, no.
You don't know, but you're feeling like what does that mean? You think SPY's up or down more than like?
We could potentially get that long-term big breakout tomorrow. It's possible, and if that happens, I think silver will break out as well, or we could get a rejection again, like high school. It could go either way. Breakouts and rejections, both part of high school and trading.
Both part of high school. I like that. Breakouts and rejections. Yeah, don't miss that part of high school for sure. But yeah, I mean, it seems like, I mean, the way you look, or the way, like, I'll pull up like the daily chart here on the SPY. We have kind of been in this range for a while, and I think, you could still draw a line here and say we've still been making lower highs, and you want to see us like break out here, but the way I see it, as long as we don't start like breaking back down toward this 3,500 level on the SPY and whatnot, like I think the more we don't have this like huge move to the downside or like huge bearish catalyst, like I think that might just give people like enough confidence that, like, all right, it's time I can start sprinkling some money. And like I know at the end of the day we're still missing a lot of money from like institutional big banks, money that has been taken out of the market that is still yet to return. And basically my point is I think the longer we are just kind of like in this range, I think the closer we are to people being like, maybe we aren't going to see that huge move to 3,300 or to 3,000 on the SPY. Maybe we can start nibbling here. Maybe we can start buying here.
Well, what I think is a possibility is, and I said at the beginning of the year, if 38.18 held on ES, that we could potentially get to 42.63. And now, I think as long as 3966 holds, now that's the next. We cleared it, we back tested it. Now 3966 holds. Then I think we could still get up to 42.63 or whatever that is in SPY. And then if you look at and then on the weekly chart, there's potentially, if we get there and then come down, there would be all sorts of talk of inverse head and shoulders there, but that's a longer term pattern. I have no idea whether or not it's going to come to fruition or not, but it is something that we could get to 42, 4,300 and then come down and then get to that shoulder area and either fail or bounce a little bit and then fail. That would be extra evil. I could see that.
Yeah. And I mean, like one thing here too is just like I'm looking at, I would like us to see us take out this like 410 level that we kind of like got up to in December, but like you said, it was like high school. We got rejected again. And like I want to see us, finally break through that rejection, get you finally lock in that date that you've been trying to for a while. And then I want to see it kill it. I want to see it do well on a date and get above the next level, which is that 430 level. So until like those two things happen, I don't know if I can go full bull and get like really bullish, but I will say that I think in general, I'm a little bit more bull. Like I said it on the show the other day that if it was like a scale from 1 to 10, 10 was as bullish as you can be, 0 is as bearish as you can be, I'd probably be at like a 6.5 or a 7. Like I think I'm more bullish than most people out there right now, probably even leaning a little bit more bullish
Me
than
too.
neutral, but still not like I'm not convinced yet. Like I haven't. I've had my heart broken too many times by this market before to fully buy back in. You know.
Yeah, and just for that very reason is why it might go up. Because if you're, if you're a cautious bull, I'm a cautious bull as well. I also was, am I full bore? No, because we're not idiots. We've been through this. So, just for that very reason, though, is why if it does break above, that 410 area, and the 430 area would be the neckline, right? That I'm thinking of, and that is, I think that would be the equivalent. So that would be where a lot of people who hadn't bought in now would start to flip, I think, and then potentially get screwed if it comes back down. Because the retail's starting to get back in, but they're not fully in. And like you said, there's a lot of institutional money that's sitting out there on the sidelines, and they'll be chasing it if we get above that last high.
Yeah, 100%. And again, right now on the screen, I'm looking at a weekly level of SPY here, so you can see where we might hit what could look like maybe a double top up here and then come back down, or maybe we break through that. Either way, I mean, we are at this like pretty important spot in the market. Wouldn't you agree with that, Julia?
Yes, critical. Well, that's exactly right. And so that's why, I'm sort of, I've got this oil trade going on. It could go either way. But I do think that there, for me, if we go up, then potentially it would be better for the market to go down. It would actually make it easier on the tech market for oil to go down. So but who knows if that'll happen? You're right. People could start having confidence in the economy, and both things could go up at the same time. And it just like the old days. Maybe it's happening again. That could be.
By the way, I don't think that's what's gonna happen, Julia. I just that's like I always like. Someone hits me with a trade idea, I always try to think about like how it could go wrong. Maybe that's just a bad way to be thinking.
No,
I don't know.
No,
but
I love that. There's nothing I like more than somebody presenting the opposite case to me, because that for me is an edge. If you understand not only your own thought process and your own business case for the trade, understanding somebody else's that's opposite of yours, or that's like the most important thing you can do. That's why I really like constructive interaction.
Yeah, and I think this has been a great conversation. That's why, like, if I were, presenting that trade to a hedge fund or something and like putting together a slide, like I would outline, like I would say, like, here's where I think it could go wrong, and that would be like my biggest concern would be like if everything's essentially just going up at the same time, which I don't like. Probably not that likely. Again, that's not what I think is going to happen. That's not what I think is the most likely scenario. Mm-hmm. But it's like, if that'd be like one of the big concerns, because like you said, or like you outlined, like there are multiple other ways where oil ends up coming down, whether it's everything going down together or the market going up and then oil getting hit. Yeah. So I don't know. I mean, you would have to, apply like a percentage to all of those, what you think was like the most likely. But I think it's a good trade idea.
Okay. Well, thank you. I like personally, if we do break out, I think NASDAQ's going to lead. So I like that trade as well. And
so, yeah, you could go like long tech, like long Qs, and then short oil, and that way, like if everything does go up, all right, well at least you're it's kind of hedged in a way. And then if you're exactly right to where oil goes down and tech goes up, you make a killing.
That's pretty much what I'm doing. That is exactly what I'm doing.
I see. I like that. I think that's a very smart way to do the trade. I see someone in the chat's asking, David Lim saying he's getting here late. Any thoughts on natty gas?
Oh yeah. Well, yeah, I think it's pooping. No, I am scaled in there for an intermediate long trade there. I think it's close to exhaustion in terms of the downside. I don't know if this is, or if it does go up here, I don't know if it's the bottom or a bottom, but basically, yeah, I'm scaled in for the intermediate term here. So I could be wrong, but I think it will go back up to the 4 area at a minimum. You just have to be patient and unlevered.
What makes it? I don't know what makes it about. Why is natural gas always so volatile? Like, there's got to be people out there that literally like don't trade anything else. They just trade the swings on natty gas because it's like I feel like at any point it's always in the middle of some huge breakout or some huge down, turn, or then it's gonna break out.
It's super volatile. I would recommend. I think I said sane people should not trade it. I would recommend against it. I would recommend against trading in any sort of levered way. That's not. But you know what? This is like a parent saying, do as I say, not as I do, right?
Yeah.
But I would absolutely recommend against it. I don't think it's a good thing to trade in general because it is so volatile. It's very bipolar. But I think it's close to a breakout. So just be very cautious. Have your line in the sand. Know where you're incorrect, and it's okay, by the way, if you do stop out, to set a higher price and say, okay, but then if it does get back above here, then I'll still catch the rest of the move. You don't need to necessarily catch the very bottom, or so I would let me look at it right now. I was looking at it earlier today.
I just think it's so funny because like I feel like a lot of traders and whatnot, like there's so many sayings out there that people say as if you can like, really know how to trade or know what you're doing based off sayings. Because people are like, oh, the trend is your friend, all this stuff. But at the end of the day, like even though this thing's in a huge downtrend from 35, I'm looking at UNG, just the United States Natural Gas Fund. Yep. Down from 35 down to like $10. Sure, it's in a huge downtrend, but I look at that and I'm like, if I'm going to take a stab at this, I would much rather take a stab at it to the long side. Just knowing, what I know about the natural gas markets, which isn't a lot, but like, there's not always going to be a saying or something that's going to be able to like, get you set up with a good trade.
Well, I hesitate to always tweet about Natty. A lot of people don't tweet about Natty because, it can make you look like an idiot immediately, right? But I did tweet about it Friday. I bought it at the end of the day on Friday. It was up more like 5% at the open on Sunday night, and then more even throughout the day. I've made a lot of money on Natty on Monday. But then since Monday, it's been pooping. So, I feel badly. Maybe I shouldn't have tweeted about it at all. But the reality is I do think it's a good longer term buy here for me. I mean, I don't mind having it sit there for a little bit. I think it's okay. I think it's close to exhaustion. I can tell no matter what I tweet about now, I could tweet about silver. I could tweet about the market. I could tweet about, palm trees in Florida. Somebody will ask me about Natty or say something, negative about that trade, which I think may mean that sentiment is close to very, very yucky about it.
Yeah.
And I don't blame you.
And I like the fact that you're kind of a contrarian trader, someone that's looking for contrarian ideas and whatnot, because I'm the same way. And if like everyone out there is short, natural gas because of X, Y, and Z reasons, like I'm going to be out there thinking like, all right, well, like if everyone's short, then that's not going to work. It's never that easy to where everyone can be piling into the same trade and it works out, except for the long Dogecoin trade for about, 2 months there in 2021. That worked out for everyone. But then, of course, until it didn't. But yeah, I think most times, like if there's ever a crowded trade, I'm in there thinking about like, all right, how could this go wrong?
Yeah, no, I mean, it's something where potentially you want to be in something unlevered so that it, if it does go against you, you have the ability to scale in. And I mean, right now I am long.
All right. Well, what about Julia because, we basically only talked about trades and this can be kind of the last thing we touch on, but do you do any like long-term investing as well? Do you have like an investment account and then a trading account, or you basically do everything in your trading account?
I do have a long-term investment account. I am very long gold miners right now. I am long Natty right now. as of this
Okay.
week, very long. So, and I'll get longer. But yeah, I'm starting to build a tech position as well in case we break out. And I'm
Got it.
also short oil in that account.
There you go. Well, Julia, thank you again for hopping on the show today. I know we've talked a little bit about maybe you coming on more regularly. I would absolutely love that. I know our audience would as well. I went ahead and threw your Twitter in the chat. So if you guys want to give
Oh, thank you.
Julia a follow, go ahead and give her a follow. It's on the screen as well at Cordova Trades. I'll drop that link in the chat one more time.
Thank you.
And Julia, like your sign says, I mean, nothing we've talked about has been investment advice.
Not financial advice.
Not investment or financial advice. Julia,
No.
any big fun plans this weekend? You're gonna enjoy hopefully it gets a little bit warmer down in Florida for you.
I don't think so. I'll just take the dogs to the park. That's it.
There you go.
Somebody asked where Jack was. He's sleeping on the bed beside me. He's asleep right now. He's like, I wish I could sleep right now. No, he's just
I know.
sleeping.
Dogs get to just like lounge around and for like 15 hours a day. They don't really do much a lot of the times. It seems like not that hard of a life.
No, but you know what? He knows 4:00. Like he's got some kind of internal thing because as soon as the market closes, he's in my lap and he wants to go somewhere, do something, have fun. Jaded too.
There you go. Well, at least he knows to give you, wait till markets close, then it's go time.
Yeah,
well,
he's
Julia,
actually pretty good like that.
well, hopefully next time, maybe we'll get to see him next time you come on the stream. But enjoy the rest of your Thursday and have a great weekend.
Thank you so much, Aaron. I appreciate you having me on. Thank you.
Of course, anytime. Like I said,
everybody.
Of course, we got to do it more. Everyone, smash the like for Julia. Julia, we'll talk soon. Okay.
Thank you. Okay, bye.
Of course. All right, guys, that was Julia Cordova, again, at Cordova Trades on Twitter. Let me go ahead and drop that link in the chat. Always fun chatting with Julia. She's always got some good trade ideas. And yeah, I mean, just more great guests on the show. Guys, the more you guys like the show, the more you guys share the show and get people to watch it. We've only got about 200 people watching now. We get those numbers up, we're going to be able to get more people like Julia, more guests on. We're going to be able to get bigger people on. We're going to be able to get bigger people than CNBC has on if we get enough people watching us on YouTube. So please help us spread the word, share the stream, smash the like, do whatever you got to do. People's Natty views vary widely. Yeah, Natty for whatever reason. Very, very controversial. Not that anyone asked for my opinion on Natty. If you wanted me to give you my opinion on Natty, I mean, first of all, as a trading perspective, I'll pull the chart back up. You can see how volatile it is. So if you're ever looking for something, you're feeling risky and you just want to trade something, look at what's going on in Natty. You can look at the different, leverage things. Like I might buy some shares of Boyle right now, TBH. And then, but from a more general outlook on natural gas, I do think natural gas will remain here's what I think it'll be, or here's how I view it. I view natural gas as a stepping stone from old fossil fuel energy to renewables. Where we are on that, so if we as a country are taking that step from old fossil fuels to renewable energy, and we need natural gas to help bridge that gap, the question becomes, how far along are we on that bridge? Are we getting closer to being able to phase out? I don't think so. I think in the interim, in the meantime, in the next few years, we'll see an increase in demand and usage of natural gas as we get closer to renewables. So I do like the short-term, the medium-term bullish outlook on natty gas. Alrighty, y'all. No stock market movers today. We're going to wrap up. Give Julia a follow on Twitter. Give me a follow on Twitter at AaronBree5. I'll drop that Twitter in the chat as well. Hope to see you guys there. We will be back tomorrow morning, 11:30 a.m. Eastern, as we are always. A couple other stocks we can check out today before we go, actually, that we've talked about on the show before. Jason reminded me today when we had Jason's daughter Riley on not too, what was that, 2-3 months ago? We talked about 10 cent. 10 cents up 40% since we talked about it. We gave that winner out there. We also talked about Crocs, CROX. Crocs down today about 1.5%, but you can see the crazy action in Crocs. I mean, this thing was a $60, $70 stock a few months ago, up to 120 now. The weekly chart on Crocs is one of the craziest charts you can see. Look at just how straight up this thing was, and then straight freaking down. Now getting a little bounce here. So I don't know. Crocs, interesting trade opportunity there as well. Some other shoe brands I've been looking at on. Stock's been doing a little bit better, but more of a growth company. You can see the weekly chart here really pushing up higher on. So there you have it, guys. Please smash the like if you have not already. We'll be back tomorrow. We've got some big earnings streams coming up this afternoon as well. Let me go ahead and give you guys the full docket of those. I know we will be doing Intel, I believe is the biggest one today. And then next week we will continue with some more big earnings coming. Looking at one last final checkup on the overall market, how we're doing. S&P 500 coming back higher. Looking at the 5-minute chart, you can see pushing back above those 402 levels. Looking like we're at about up about 0.5% right now, but Qs are your leader today. NASDAQ Tech up more than 1%. You can see kind of following through off that strong Tesla report. Tesla still trading higher by about 9%, so holding on to most of the gains. Giving up a little bit from the highs. We got to 161 earlier. We're at 157 now, so giving up a little bit those gains, but still trading higher. Love to see that if you're a Tesla investor. Bitcoin trading down slightly. Coinbase a little bit higher. So overall, pretty good day. Couple big things. Basically, all you need, the biggest headlines you need to know are about Tesla earnings coming in higher than expected, and GDP also coming in higher than expected. Jobless claims lowest level since April 2022. So for all the talks about a big recession and a scary 2023 and making new lows and Michael Burry this and Michael Burry that, things seem to be okay. Not great, not amazing, but things seem to be okay right now. With that, we'll be back tomorrow. Peace and love, y'all. Stay green.
This